Good morning, everybody. Welcome to the Hardcore Mortgage Real Estate Business Podcast. Today is Wednesday, October 18, 2023, here in lovely southeastern Michigan. We have a great podcast full of things to tell you what's really going on, what's factual. We're going to parse through all that. And with our guest, our panel today, we have Lisa Lawson. Good morning, Lisa.
Morning, everybody.
Lisa and I were here late last night. We have Becky Alley driving in her vehicle. Becky, do not get in an accident. Glad to have you on. We're going to talk about how busy we are. Becky Alley, everybody, good morning.
Yeah, what's going on? You know how I do. I'm slingshotting from one place to the other, making rainbows and magic and all the things happen.
I love it. And in the office today with us is Mr. Harvey Freed, co-host of the Hardcore Mortgage Real Estate Business Show, heard every Saturday morning on 97.1 FM from 9 to 10. Good morning, Harvey.
Good morning.
All right, listen, topics to include, but specifically not limited to, everybody, it's busy around here. Okay, you know the old adage, if you want something done, give it to a busy person. I can only tell you what's going on in the home buying market here in southeastern Michigan. You can't pay attention to what the national articles say. We got them right here. The national articles say it's not busy, but Becky Alley, I want to go to you first. People have to pay attention to the community that they're buying in, correct?
Yeah, that is a fact. You know, the thing is that we're in the heart of the big three, you know, as far as you got Ford, GM, the strike. So some agents they're saying they're seeing a slowdown in the market and they're seeing a slowdown in some of the offers. And we're in the heart of the strike. We're in the heart of the things that are happening that could be looked at as negative. Now, in the early part of the year, we talked about we're going to be in this transition period where you're going to see 30% get out of the business, right? Or 60% get out of the business, 30 are going to kind of stay stagnant, and 10% are going to dominate. So that 10% that took over territory, those real estate agents, the loan officers, we're the ones that are not feeling that slowdown because we are very dialed into our market, to our people. And people are still buying houses regardless of the rates. They're finally understanding that buying points might not be the best option. This is where we're at. This is the new reality. And I'm actually really proud of the new age buyers that are out there right now because they're not living in la la land as much anymore. They're really dialed in. They want the education. They want to know the next steps. They want to be informed, and they want to be homeowners.
So, Becky, I'm going to tell you this, and I'm going to go to Lisa and talked about it with you and Harvey and Lisa. Lisa, I was sitting in a very busy real estate office yesterday. We were doing a closing, and I was talking to both agents who are real estate partners there. They're very, very busy right now. They're busy. They're telling me, you know what? They don't listen to what's going on in national news. They have so many buyers, but the problem is there aren't enough homes on the market. They're busy. People are buying. Are you experiencing the same thing? Because that's what I'm experiencing. You're on mute, Lise. Unmute. Hit the button. You're on mute. There you go.
Is that better?
Yeah, that's better.
So yes, absolutely. I mean, I think that it's not maybe quite as bad as it was over the summer, right? But we still have a housing shortage, even though it may not be quite as severe as it was. And that's probably really to do with maybe having a few less buyers out there. So it's slightly softened. But, you know, absolutely, it's very difficult. You still have to tell people to be patient. You know, a couple of years ago, before the shortage really started, kicking off, maybe 3 years ago, people could go out and find a home in a month or two. And now I'm telling people, you really want to give yourself a good 6 months, make sure you get pre-approved 4 to 6 months in advance, because it might take you 3-4 months to find the perfect house. And after that point, it's going to take you up to 45 days to close. And sometimes even longer. Maybe the seller needs to find a place and they're asking for occupancy, and so you need to make sure that you're planning accordingly and allotting yourself enough time to get everything done.
Well, market specificity, say that 10 times, is extremely important on Harvey on how you make an offer. Okay, there are certain pockets in the area that are market specific that are really hot. You have to be aware of how many offers, what kind of foot traffic there's going on. So when you go in, and I'm not saying that you have to offer over ask every single time, But if you're in an area and there are one or two homes for sale and you know they're getting a lot of foot traffic in there, you got to be prepared to come in at list or over, don't you, Harv?
Yeah, we're seeing the educated people are definitely attacking it that way. And Harry, as you talk about the slowdown, or maybe the idea that there might be a slowdown in certain regions, it doesn't appear that way here. We're still having the old-fashioned D's, the divorce, the reason why people might need to buy another property, business situations that have caused families to maybe downsize, or maybe their family's grown and they want to upsize. But yeah, even yesterday here, I got a call on a pre-approved buyer from the listing agent, completely blindsided that the selling agent didn't call me. And sure enough, it was a lowball offer, and the listing agent shared that with me. Interesting strategy at 270,000 at 258. I know the client needs to get the house offer accepted. They really like the house. So a little confusing on why their strategy was to come in a little bit lower. And of course, I gave the additional confidence to all parties to say, look, somewhere in between what the offer was and what the listing price is, we're going to put a deal together. And of course, they were 800 borrowers, and I'm hoping to get a signed purchase agreement here in the next 24 hours.
Well, you will. And getting to Lisa, I'm sitting at the closing yesterday, and both realtors told me the reason why their buyer and the reason why the seller accepted the offer is because it was our approval letter that did it. We have the relationship with the realtors. We've been in the market for a very long time. It's not a click and switch lender situation. You like that, Harv? Click and switch? You can use that. It's not a click and switch borrower or lender situation. They were familiar. All parties were familiar with people in the transaction. So when I say that relationships are key, Lisa, you experience that all the time in your neck of the woods. And I'm going to say the word again. Specificity. Okay. It has to be specific to your market, to your borrowers, to the buyers and sellers. And that relationship is the key, Lisa. That's the determining factor.
Absolutely. I think it's always more comfortable when you work with people that you know, right? It's hard to trust a stranger. I mean, it's just our innate nature. We don't know what's happening. We don't know if they're being upfront with us. When you work with someone that you've worked with in the past and they have a reputation for being upfront and just, getting it done, it I think puts everybody at ease, and I think it instills confidence that this transaction is going to close successfully.
Yeah. And I will say that is always the key. Relationships are always the key. I stood in front of Chase. We were on the Chase advisory panel years ago, and I talked about the relationships. They were brighter than I was. They coined that phrase. They went ahead and trademarked relationships are the key. So that's a little bit of tidbit, a little bit of information there. Becky, in the not around here category, we're going to stick in the not around here. National news, home buyers hit brakes causing unseasonal growth in inventory. Not around here, not a lot of inventory, and you're on mute, Beck, so you're going to have to unmute yourself. Not around here. We are not seeing a lot of inventory here. So talk about reality, Becky, okay?
The reality is that you have to have a certain mental stamina to be today's buyer. Nationally, houses are sitting on the market for 30 days. Here, they're going in a weekend still, over asking. That is really what the norm is nationally. And in Michigan, like we talk about on the radio show quite often, it seems to come from the east, the west, and south to north, right? So it comes in from the sides in the north. So Michigan and the south and the north in our area, we're normally the last to see these certain areas or the delay in houses sitting, the market shifts, right? So today's buyer, they need to be cognizant of what's happening. And we really preach that a lot, but you have a lot of people where it's like, they're just busy being busy, and you need to be with people that are being productive with their time. And I'm excited. I mean, the problem though, too, that I've noticed is a lot of the inventory is skewed because you have a lot of house swapping. You have a lot of mom selling to son buying grandma's house. There's a lot of for sale by owners right now where people are buying their landlord's properties because they're getting those first dibs on that. So some of this inventory that we even see is not really hitting the market like it should.
Yeah, let me give you some reasons, Becky, that people should buy now. And I'm gonna go to Harvey on this, but Lisa, Becky, and Harvey, the time really is now to buy. Of course, the reasons to buy are we want to find a new house, and if you can afford it, but rates rates are probably, and I'll go on a limb here, they're probably going to come down late in 2024, definitely in 2025. There's going to be more competition in the housing market. People are like sheep. All right. As soon as things, all of a sudden they read in the paper that rates go up, maybe they stop shopping. That's a bad message. They should be out buying because they're going to find a house, and they're going to find a house that they want. There's going to be less competition. And Harvey Freed, when rates come down, maybe late 24, definitely in 25, we can refinance them, right? Why wouldn't you buy now with less competition?
Well, yeah, we're trying to urge as many families out there now, as appreciation's been somewhere between 5 and 10% here in Southeast Michigan, which is our region, but we've seen it across the area. So it doesn't matter where you want to buy in the United States. It could be Florida, Arizona. If you want to buy that second home, you want to get in there now. It's 5 to 10% appreciation. One of the spotlights have been actually the hurricane came through Fort Myers, Florida, and literally devastated the whole region. You should hear, talking to a couple real estate agents down there yesterday, what is going on down there is everybody wants to buy a vacation home, or they're retiring. And of course, we know the demographics here, that the older population, they're going to be headed down there. They're retiring soon. They're looking to sell up here. So with that being said, sooner is going to be better than later. You can always refinance your house and you'll have that equity piece sitting there for you.
Yeah, this is the Hardcore Mortgage Real Estate Business Podcast. Today is October 18th. I'm joined by Becky Alley, Lisa Lawson, Harvey Freed. These people are extremely experienced, over 100 years of mortgage banking experience, just the four of us. Let me give you another reason to buy, everybody. The forecast for next year, 2024. This is next year. The forecast is for an 11% increase in mortgage purchase applications, Lisa. So are we going to be sheep and wait till 2024 and buy when everybody else is out there? Or shouldn't we go ahead and instruct our people? Obviously, here, if they can afford a house at an 8% rate and rates go down and we can refinance them, can't they afford a lower payment? I mean, if you can afford a higher payment, you can afford a lower payment, correct?
Absolutely. Absolutely. So, there's always people saying, I'm going to wait. But if you wait, just like we're saying, that anticipated 11% increase, that's that much more competition that you're going to be up against. There's that many more people going to be bidding on the house that you want. And it means you either are most likely going to pay more than if you did it today, or there's a chance that you might not get the dream house that you really wanted and end up getting number 2 choice because you've waited. So, time is of the essence. If you were in a position to buy and you can afford to buy right now, there's absolutely no reason to wait.
Yeah, I love that. It's not that we're pushing people to buy houses. What we're trying to do is give people information that they can intelligently make a decision. If you wait, there are going to be more people out there. There's still a lot of people buying out there. Like I said, at closings every single day, the realtors in our community are telling us now is the time to buy because there are going to be more buyers in the market next year. So Becky, I saw an article that reminded me of you and Grandma Alley.
Sweet Grandma Alley.
Yeah, the article said, many parallels between the housing market now and the late 70s and early 80s. And your grandma always comes to mind because she's the one that told us, listen, I bought a house at 17, 18%. What are people crying about 8%? We know mortgage rates are touching 8%. But here's the difference, Becky. The difference between now and then, as I see it, it's a very different take. Rates aren't as high, okay? We're only around 8% right now. There are many more millennials out there making up the majority of first-time home buyers in the market, but there are less homes on the market now than there were back then. And the job market now is more plentiful in 2023 then trust me, I was around in the late 70s and early 80s. So with all of that, those are facts. I don't see the parallel, Becky. My feeling is that rates are still very much lower than they were, and there are so many buyers and there's less inventory. So to me, around here, again, specificity, specific to our market, it does not apply. It just doesn't.
Okay, so first of all, Grandma Allie is a gangster, and anyone of her generation, she just turned 87, and you're talking. I mean, they easily are the greatest generation, in my opinion, just because of the life experiences they've had. They went from nothing to something, and where a lot of that comes from is their perspective. They didn't have this sense of entitlement that most people have right now. They were coming from nothing, driving up here on a hope and a dream with $10 in their pocket to get a job at Ford Motor Company. And I'm speaking of my grandma's story specifically, $10 on a Greyhound bus from Gate City, Virginia. Where the hell is Gate City, Virginia? I mean, it's literally like it's like the city that land for that time forgot because they built the freeway around it. We were lucky enough to take her back to her hometown a couple years ago. But anyway, they came up here with a hope and a dream, and all they wanted was to get a job and build a life and have a home. And that still is the American dream deep down in the core of all of our beings, is to have a piece of that real estate. But when you really put it in perspective, they didn't care that they were paying 18%. They just cared that they had a roof over their head and heat and all the things. And obviously the lifestyles change. We've evolved. Our jobs as individuals, as parents, is to be better than what our parents even did for ourselves. So the natural evolution is there. But when you hear people tripping on a 7% interest rate, but yet they don't bat an eyelash at the $800 a month car payment that they have, that is literally a lease that they're not investing on, and it's an appreciating asset. So that $800 is for a big fat nothing. You kind of have to laugh about it when you really just break it down, as far as like, it just doesn't math. So when we talk about when it's good to buy for you, it's when it makes sense for you. Everyone's financial situation is different, but no matter what year, decade, whatever, home ownership is always going to be the American dream.
Yeah, and there's no parallel because Lisa Lawson, and you are the queen of this. I have anointed you the queen. You're the Google queen. You're the DPA queen. Let's just call it what it is, okay? I mean, if you watch The Voice, they call Reba McEntire the queen. Okay, you're our queen, Lisa. Okay, so let's go like this. You like that analogy?
Your one chance, fancy.
Yeah, there you go.
Don't let me down, girl.
There are more mortgage programs right now to qualify potential buyers on. 3% conventional did not exist in the 70s and 80s. I know, because in the 80s, I had to struggle to get somebody approved at 5% down. There were no 1% down, DPA, 3% down programs. So please don't tell me that this is like the 70s and 80s. Hey, guys, everybody, no, I'm not moving to Florida, where Harvey wants me to move. I'm not going down there and buying. Bottom line is this, is that we were around then. We know what's going on. There's no parallel to me specifically. And Lisa, a lot more mortgage programs to qualify, right?
Yeah, I mean, I was born in the 70s, so I can't exactly say I knew what was being offered then. But, even since I started almost 20 years ago here, the amount of programs that are available compared to where there used to be, it's blossomed. It's tenfold. It's really exponential growth. We have things now that we've never had. We've got down payment assistance programs that piggyback off FHA, off conventional loans, off USDA loans. We've got ones that require some, more stringent income requirements. We have ones that have no income limit whatsoever. You can make as much money as you possibly can make, and you can still qualify. So and as low as credit scores, as low as 600. So there's something out there for literally everybody. And, especially if you're like, hey, I've been trying to save, but, you're one of those people where the bad luck cloud just kind of looms over your head. And every time you get a little nest egg, something else happens and you got to replace your transmission or, something else. And we get it, life happens, but that's what these programs are for. They kind of fill in those blanks and allow you to be a homeowner and take advantage of all the opportunities that homeownership gives you.
Yeah, and that's really what it's all about. I mean, there are more mortgage programs. I mean, we can qualify buyers. That's what we do. There is no charge. We do not charge or take a deposit, hostage deposit money on mortgage applications just to qualify you. We don't. So, Harvey Freed, I'm going to give you the last word. Here's the last subject of the day. We'll go around the horn. Harvey, Becky, Lisa, I'll finish it off. But so what rates are close to 8%? The theme is so what? It's got to be specific to your situation. If you can make a higher payment, we'll get you in the house. We're going to refinance you down the road for sure, because we always do. We will always call you, Harvey. So, yes, rates are close to 8%, my take on it is yada, yada, yada. So what, Harvey?
Yeah, no doubt, Harry. When I run into folks that purchased homes in the 70s, in the early 80s, late 70s, early 80s, and they were talking about this 12, 14, 16, 18% mortgage interest rates. One of the things they used to tell me was, but Harvey, back then, they would get a CD, they would get a money market account, and those were paying 6 to 12%. So I reached out to these people and I said, well, that was great. You can make all this money on your money. He said to me, Harvey, no one had money in the late 70s or 80s. So, different times, different strokes for different folks, and timing's all about life. But you look back, and when those rates in the late 70s were in the double digits, 12 to 14% here, the cost of the home wasn't quite as much. Yeah. That same house in the county that we live in here, right here in Oakland County, the average cost of a home late 70s might have been $35,000. That might even be on the high side. That's the average. The nicer homes were selling for 70 to 100.
But
So
if
the
you
loan-
made $30,000 a year, that was a lot of money back then.
It was a
Harvey.
lot. Yeah.
People weren't making as much money either. Okay, so here the thing is this: is that all I'm going to tell people is that in 2024. You could see more people out shopping for homes, and the inventory levels are not going up. So what are you waiting for? I heard one guy on the radio a long time ago say, what are you waiting for? I don't understand why people are waiting, Harvey. Last words of the day, Harvey, what do you got?
My last words are, again, education still seems to be making its way through. I even hear the real estate agents talking about the education piece, that their better experiences with their buyers are when they're able to sit down with them and truly educate them, even if they're clickers. We talk about these clickers. Once that real estate agents are able to meet the families and either get them involved with high quality mortgage lenders like Capital Mortgage Funding, the education's there. This is what's building the confidence and making it easier for real estate agents. It's so important now that the real estate agent lender partner is educating those buyers so that they're willing to pay a little bit over asking price, that they're willing to dive in head first into these close to 8% interest rates. That additional confidence, it's truly what's making the market a lot easier for the real estate agents. And another reason why they need professionals with experience to help them with those buyers.
All relationship oriented, Harvey. I love it. Lisa, last words for you. Then we'll go to Becky, and Becky's going to tell us who we have on the Hardcore Mortgage Real Estate Business Show this weekend. But let's go to Lisa Lawson. Lisa.
Yeah, I was just say you don't know what you don't know. And I think a lot of times people just have fear to even get started. They think they need more money than they really need. They think their credit isn't where it needs to be. And they're afraid to try. And, unless you put your priorities and realize that you're the priority and get what you want, you're going to have to make that phone call. We're here to help. And sometimes the answer is absolutely yes, let's get started. Sometimes the answer is let's do a little homework first and put you in the best position you can be. So in 1 month, 3 months, 6 months, whatever it is, you will be ready. But you don't know until you get started. Call us.
I love it, Lisa Lawson. Okay, Becky Ellie, last words of the day. And who are we having on the Hardcore Mortgage Real Estate Business Show this Saturday morning at 9 o'clock?
We're going to have Karen Maessi from Thrive Realty Co., as well as Mike from Top Floor Home Inspections. Two very knowledgeable people. If you know anything about capital mortgage funding, we preach about never waiving that home inspection. So anytime we can have someone in the studio speaking on that topic to reattest to all our listeners, our longtime listeners, it's always going to be a good conversation. So make sure you do not miss us this Saturday, 9 to 10, 97.1 on the Hardcore Mortgage Show. We are really pumped about both of these special people coming in.
I appreciate that, and thank you. My last words for the day are: I haven't been more excited about a real estate market in how long? I can't remember. I am pumped up about it. Not only was our closings yesterday, I had the ability to go ahead and get in front of a bunch of real estate agents, give a little talk about, everybody's worried about where do you see the market? Where do you see interest rates? Where do you see interest rates? I say, where do I see interest rates? So what? They're at 8%. How many people remember when they were at 12 3/4, 14%? And I had a handful of old school realtors there. They remember. We just flipped the switch, and the perspective has to be, you got to get in now, because the competition is going to ramp up in 2024 and 2025. We know rates are going to come down because, Sir Isaac Newton's theory of relativity, what goes up must come down. Sooner or later, it's going to happen, and we can take care of you on that end. So my last words of the day are, it's always a good time to buy a home if you find the right house for you. It's got to make sense. We'll make sure you're in the right program. It's still a fixed rate market out there. Don't get caught up in anything else. We'll do the math for you. We'll take care of it for you, as we always do. I want to thank Becky Alley, Harvey Freed, Lisa Lawson, Roberta Beauchene, our producer director. He's in the booth. This has been the Hardcore Mortgage Real Estate Business Podcast, Wednesday, October 18, 2023. We'll see you soon.